It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast, talking and covering the latest property news for you every morning, 7 days a week, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. If you've had a very hard-working week, well, up to a Friday the weekend is just around the corner, June the 21st today. And I see Australia continues to be the top choice for Asian property buyers, despite its ranking as the world's most unaffordable market. That is according to a recent report by IQI. Now, the report highlights Brisbane and Perth as the hottest destinations alongside other major cities across the country, driven by factors like lifestyle, educational opportunities, and proximity to Southeast Asia. Asian buyers, particularly from mainland China, Hong Kong, Vietnam, Taiwan and Nepal, have invested significantly in the Australian residential properties, totalling around $5.3 billion, and the IQI report says that buyers are now exploring broader metro areas beyond CBDs, seeking larger homes and lower prices. Since we're talking about Brisbane, let's take you there right now to Varsha Daswani from SAI Real Estate Group, and looking at a slice of the Queensland real estate. And a very good morning to you, Varsha. This morning we are looking at the property market insights for Moffat Beach versus Maroochydore, and I believe you've got some information for us this morning about how the Moffat Beach property market is performing.
Good morning, Craig. The median house price in Moffat Beach is about $1.47 million, and there are about 42 properties that have been sold in the past 12 months. The median unit price in Moffat Beach is about $792,000 and has grown about 1.2%, and only 10 units have been sold in the past 12 months, and only about 32 days is the median days on the market. So the properties don't come on the market that often, and when it does, it gets snapped off really, really quickly. So in Maroochydore, there are about 16,800 people in Maroochydore, whereas in Moffat Beach, there are about 2,500. The median house price is about $1,022,500 and has gone up to 2.2%. And about 178 properties have been sold in the past 12 months. The median days on the market is about 69 days. And there are about 3,115 buyers actively looking to buy just in Maroochydore. Whereas the median unit price in Maroochydore is about $735,500 and has gone up to 9.4% in the past 12 months.
Okay, so that's pretty interesting. And if you are an investor thinking about investing into the Brisbane property market, there are always different messages from different property professionals. Just depends on who you're talking to at any one moment. So where, Varsha, do you think that some of the better suburbs to invest in Brisbane are right now?
Craig, the top three suburbs in Brisbane is Tenerife, New Farm and Ascot. You cannot go wrong when you are thinking of investing in any of these suburbs. Tenerife, the median property price in Tenerife is about $3.74 million, because this incredible inner city suburb has all the ingredients for a bulletproof investment. All a stone's throw from our biggest employment hub, which is the rapidly expanding Brisbane CBD. So the median property price in New Farm is about $2.675 million, and the average age of people living in New Farm is about 20 to 39. New Farm is a beautiful residential and riverside neighbourhood that is considered among the most desirable in Brisbane. Its village vibe and wealth of conveniences, schools and transport links have built strong demand for property in this area, so which makes it the median house price to be $2.63 million.
Okay, so yes, a lot of money for New Farm and Ascot. Let's talk about this suburb, which is also on your list.
So with Ascot, the median property price in Ascot is about 2.5 million, and the average age in Ascot of people living in Ascot is about 40 to 59. Now, Ascot is right in the middle of Brisbane's two largest and rapidly expanding employment hubs, the Brisbane CBD and Airport Precinct. While apartments have taken a backseat due to nearby oversupply issues, houses continue to go from strength to strength. Another suburb with an iconic cafe strip, strong school catchment, and an easy train or ferry ride into the Brisbane CBD.
All right, we are talking to Varsha Daswani. We will come back in just a moment and we will talk about the commercial property space. We'll do that next.
As we approach 1,000 episodes, a big thanks to all of our guests for their insightful knowledge, trends and forecasts. We look forward to another 1,000 episodes together.
Well, if you are a highly leveraged homeowner, you don't need me to tell you that you are probably hurting at the moment, including first home buyers and investors with multiple properties. You are still facing probably one of the toughest financial strains following no movement downwards on those interest rates. Of course, at the start of the year, we were hoping that about now was the time that we might see rates come down. But now we seem to be thankful just to see them not going up. And despite the cash rate in pause mode, some experts are forecasting another potential hike later in the year if inflation remains unchecked, which is intensifying your mortgage repayments. Recent data, in fact, from APRA is telling us that rising mortgage delinquencies with owner-occupiers are falling behind more than investors, which is nearing levels last seen during COVID-19 peaks. So that is not a healthy situation, and those with high loan-to-value and loan-to-income ratios are most vulnerable, with nearly 2% already in arrears. And you no doubt probably know of somebody that is in that very vulnerable situation.
Gain insights with exclusive conversations from real estate professionals about buying, selling and investing across Australia.
And it is a Real Estate Friday, talking property in Queensland with Varsha Daswani from SAI Real Estate Group. And since we're in Queensland this morning, always nice to check in on the commercial property market space. So how is that shaping up for June in 2024?
So, Craig, as the buyers and sellers recalibrate their expectations and financial strategies in response to the current economic climate, attractive opportunities are emerging. The cash rate is currently at its highest since 2011, sitting at about 4.35%. This specific economic condition has led to a nuanced performance across the commercial real estate landscape. Despite this, 2024 is poised to offer excellent opportunities to secure valuable assets at appealing prices. There is a growing preference for a high-quality office spaces that not only draw employees back to the office but also boost productivity. Fringe markets such as in Sunshine Coast in Maroochydore, the investment opportunities due to a shortage of a new development, presenting investors with a chance to capitalize on rising demand for prime or A-grade stock. For example, there is an $83 million project that has just been approved with a resimercial building in Soho, which is a Maroochydore CBD. So there's quite a lot of exciting things happening in the office sector.
All right, resimercial, haven't heard that before. And when talking about the commercial property market, one of the asset classes, of course, is the medical sector, which seems to be growing, I think, because of the older demographics.
That's true. The demand for healthcare services is on an upward trajectory, fueled by an aging population and a greater focus on health and wellness among the general public. Now, this trend has increased the need for medical properties, including clinics, specialist centers, and hospitals. Now, given the critical nature of healthcare, medical real estate has demonstrated resilience in the face of economic fluctuations, often offering stable and long-term returns for investors. So if someone is thinking of investing in a medical sector, it's usually 10 plus 10 year lease. So it's quite secured. So investing in the medical sector in a commercial space is a perfect example of having a long-term set and forget investment.
And what about the state of the retail sector, which is just such a massive asset class?
It sure is. In the retail sector, the neighborhood centers and the fast food outlets have emerged as areas of interest. Now, shifts in the consumer behavior propelled by the rise of online shopping and the pressures of the cost of living have led to varied impacts across the retail landscape. Properties centered around essential services and convenience have sustained high consumer demand despite economic headwinds. Now, this trend is expected to carry on into 2024, favoring retail assets that focus on essential goods and services. So fast food real estate, especially premises leased to major national and global tenants, offers particularly appealing opportunities for investments.
All right, so we'll wind it up there. Thank you for that, Varsha. Enjoy your weekend, and thanks again for coming on to the Real Estate Breakfast this morning.
Thank you so much, Craig.
Don't navigate the real estate market alone. Let us help guide you in the world of real estate every day. Make better informed decisions with the latest news and insights.
Because Perth does have a history of having these long periods of stagnations followed by a period of fabulous growth, it's one of those markets that you have to really time significantly if you want to be able to get something out of it as an investor.
Are we, do you feel, in this stabilising market at the moment? You know, some people say that at auctions there are a few more people showing up. What's your sort of take on that?
I think that might be agents trying to talk up the market or property people trying to talk up the market. It's a funny situation at the moment because typically as we head into autumn, we see things start to slow down a little bit anyway. But if we look around the country and see the country as a whole, we are definitely seeing a significant number of markets that are just starting to see not what I would call a slowdown, but maybe a stabilisation.
Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week, only on the Real Estate Podcast. We connect you to the best real estate information across Australia. The Real Estate Podcast.